S&P 500 futures contract off of a daily chart. All right. As you see here on this chart, I measured the Fibonacci retracements from this low up to the highest high right up in here. All right. And again, the way I do that, I'm personally using TradeStation, but all software charting programs have the same tool. All you do is grab it right here, left click it, get the tool, you draw it from low to high in this case, low to high, because we want to know where logical support levels are based on the Fibonacci retracement levels, right? So again, we measured from this low. Again, let's take a look at the date. The low that was put in place on June 24th up to the high that was put in place on August 5th, the 1705. We had 2 days in a row with 1705 as the high, Friday the 2nd, and Monday the 5th before we topped out here a little bit. Okay, now we're coming down, as you can see. So again, measured from this low up to this high. We are finally at that 38.2% retracement, as you can see right in here. Okay, the 50% of that move up right here is 1629.25 right down in here. So honestly, I'm expecting some type of support to come into play. So we hit this level yesterday. We went down through 1647.35. We actually traded down to 1642.25. Today, even though it's early in the day, the market's only been open for 45 minutes. So far, the market has not been able to penetrate through yesterday's low or obviously through yesterday's high. So what I would like to see anywhere in here, okay, really what I'm looking for, anywhere between the 38.2 and the 50% retracement right in here, anywhere in here, okay, the 38 and the 50, I'm looking for some type of price pattern, okay, to really try to start positioning myself to get long. Now, I'm looking for that engulfing pattern, either the engulfing pattern where the high takes out the prior bar's high and the low takes out the prior bar's low. I would need to see the market actually close in that top quarter. And then, of course, I would love to see an inside pattern, right, the opposite of an outside, right, where the high is lower than the prior bar's high and the low is higher than the prior bar's low. In a case like that, I would be looking for the market to penetrate up through the high before executing long. Or I'd be looking for something I like to call the BOB, B-O-B, blow-off bar or shooting star for those candlestick users, okay? And again, open and close would need to be in the top quarter. And preferably, the range of the bar, roughly about 25% larger than the prior three. So open and close in the top quarter. So I'd like to see one of these price patterns occur somewhere in here. Now, if we start breaking down to the 61.8, that would be really my absolute last level of potential support, because as you can see right now, we are breaking down through that 50 exponential moving average, as you can see right in here. Right? So I want to be careful in here. I don't want to be buying just automatically. Although if I see something on an intraday basis, I will start positioning myself to the long side. Let's take a quick look at an intraday chart and see. All right, take a look at this chart. This is a 3-minute chart, and as you recall, yesterday it opened up a little lower, and then we'll get into what's going on today. But there were a couple real nice day trades yesterday that occurred. Opened up, put in this low, ran up to this high. Now, this is a 200 exponential moving average. Market came real close to that 200 exponential moving average. Came within 75 cents of testing what I like to think is a significant high from Friday. Created this inside pattern right here, okay, and created a very, very low risk entry to the downside once the market penetrated down through the low of that inside bar. Able to grab 2 points in there on the way down. But honestly, as the market came down, what I did was I wanted to measure the fib retracements from this low up to this high. Okay, and I was looking for the market to actually hit support at that 38.2% of that initial swing to the upside. From this low to this high, the 38.2 was right here, right between the mid to the lower band, right back, slightly below that 50 exponential moving average, and I was looking for a bounce to the upside to at least try to retest that high. So that put us long at 16.53 3/4 right in here, and took another 2-point profit on a bounce. Just looking for a quick 2 points here and there. So again, a nice counter trend trade right here when it took out that low, right? Actually stopped and reversed at a support level, right? A buy level for another 2 points. And then as the market came down and drifted lower, you can see that the bars turned from green to red right in here, right? And you see that the market penetrated down through that 61.8% retracement of that first swing from low to high. So at this point, right where I've got this arrow, I was looking to sell the remainder of the day, not only because the bars were red, but because now we were trading significantly down through this 50 exponential moving average, and we were making lower lows and lower highs. So every time the market rallied to that 50 exponential, right here was the first nice selling opportunity, made a new low here, and again back to that 50 exponential. Try to keep it as simple as possible. So there were nice day trades yesterday. Now let's come into today. Look at today so far. The market opened up right in here, right at 933, came down, okay, tried to retest yesterday's low and failed, and then rallied up. Now we're trading above that 50 exponential moving average, okay? So we're trading above that 50 exponential moving average. We had three consecutive price bars where the low was actually at or above that 50 exponential moving average. When you get a scenario like that, you can buy that first pullback and look for an automatic 2 points. All right, so that's pretty much what I'm seeing here in the E-Mini S&P. So on the daily chart here, we are hitting a support level, right? We are back at that 38.2% retracement. So I'm looking for a pattern off of that daily chart to start positioning myself to get long this market. All the while, looking to day trade this market as I do each and every single day of the week. So there are good opportunities every single day. And as you see from yesterday, we had a nice, again, a counter trend trade first thing in the morning, a little after 10 o'clock, as it took out one of the bars you see me talk about all the time, that inside pattern, took it down to a logical support level between the mid to the lower band at the 38.2%, took it up for 2 points. And then as the market came down, once the bars changed from green to red and we started to trade consistently under that 50 exponential moving average, that's when you're looking to go short the market each time on that rally to that exponential moving average. Now, granted, the bars are red still, but the bias of the day is definitely up. I mean, look at the market's been open for 54 minutes now, and once we started pushing up through that 50 exponential, that's where you want to be looking to get long on any pullback. Okay, so hope that helps. Have a profitable day, and I'll be back with you tomorrow. Actually, tomorrow morning I will not have a video. I've got some family things I need to attend first thing in the morning, and will not be able to get one out for you tomorrow. Maybe tomorrow afternoon I'll put one together, okay? But Doc will be back with you. Have a good day. Bye for now.